Abhilash Narayan is a senior investment strategist, Group Wealth Management at Standard Chartered Bank. He's joining us right now. Abhilash, good to have you with us here. Thanks very much. I don't know if you read Matt King of Citi's View. We were just talking about that. Sonia read that out. He's expecting the markets, as he put it, to experience a sudden pressure loss. Basically, peak liquidity is kind of behind. Some of the money which has come back into the market, but that will start to reverse once again. That's his view. I don't know if you have a firm view in terms of how you're looking at things. Abhilash.
Yeah, I think our view is broadly similar. So what we've been highlighting is that if you look at the rally that we've seen in global stock markets, especially US, that has been driven by PE expansion. If you look at earnings expectations, they have contracted from around plus 5% at start of the year to around flat right now. If you look at the volatility in US stock market, especially VIX index, that seems to indicate that it is possible that markets may be getting complacent. VIX is close to 20, which is broadly in line with historical averages. And when you look at the volatility in bond markets, in FX markets, that is quite elevated. So we think that, obviously, equities benefited from the underweight positioning, some of the closing of those underweights. But on a 3 to 6 month horizon, we think that there is a high likelihood of a pullback in stocks, especially in US.
Okay, a high likelihood of a pullback in stocks in the US. Abhilash, hi, good morning, and thanks for being with us on the channel. What about the Indian markets? How are you feeling about that? Because these are volatile times, which we were just about getting back on track, and now the markets have once again slipped into a range. How are you feeling about the rest of the year?
Well, actually, over the past couple of weeks, I've become slightly more, optimistic or less concerned about Indian stock markets, and we are neutral on Indian stocks vis-a-vis Asia ex-Japan equities. And that boils down to three reasons. So first, let's look at valuations. Back in October 2022, Indian equities were trading at around 120% premium on a PE basis compared to Asia ex-Japan equities. But today, that is down to around 48%. It's broadly in line with the 10-year average. So from a valuation perspective, that headwind has sort of gone away. If you look at earnings, we expect around 15% earnings growth in FY24. So, that again continues to be supportive. And this would be the fourth year of double-digit earnings, growth in Indian equities if that materializes. So again, it's a positive when you compare it versus US, where we do expect a bit of contraction in earnings. And last but not least, we think that the strong domestic investor base is a big positive, despite the fact that we've seen FIIs sort of pull out some money, but the strong domestic base does provide a flow to the market.
All right, so Abhilash, but for now you're being neutral on Indian markets, is it?
Yes, so we are neutral on Indian equities relative to Asia Japan.
Okay, and you were factoring in, I think, one more rate hike. The RBI governor paused the last time. Do you think he's done, or do you think that one more rate hike can come about?
Well, if you look at the minutes of the latest RBI meeting, obviously it shows that the central bank remains concerned around inflation. But obviously the global factors did impact the RBI decisioning. So I think the room remains open for RBI to hike, but our base case is that we've probably seen the peak in rates. So RBI could remain on pause for the next 3 to 6 months. And then we'll need to see how the global backdrop evolves.
Right, Abhilash, and you're still overweight China?
Yes. So we are still overweight on Chinese equities. And I think if you look at the recent data that's been coming out of China, that's quite positive. So we've seen a big upside surprise in Q1 GDP there. And yes, US-China tensions continue to simmer. We saw an announcement that Biden may be looking to sort of impose restrictions on US investments in Chinese companies. But net, we think that the strong domestic growth should lead to higher corporate profits in Chinese companies.
Okay, fair enough. Abhilash, thanks a lot for giving us that crisp take on the market. Have a great day. Have a good weekend, actually. We'll see you again very soon. Well, that's the word coming in on the markets. But let's slip